morning, and welcome back to the channel. I want to talk about two trades I took on the Euro US dollar yesterday on the 29th of March 2023. Here are the befores as well. As you can see, two lovely trades. So without further ado, let's jump straight in. Okay, so I'm going to do a full top-down analysis starting from the weekly on the DXY. As a higher time frame narrative is everything in trading. I'm not one of these retail traders that just looks for patterns on the 5 and 50 minute time frame, because that's just ridiculous. So anyway, jumping into it, DXY on the weekly, we have OTE from this low to this high. We traded into it, closing this tiny fair value gap here. Traded into, I think, it didn't quite nib the 0.79, but it traded into 0.705, and we've had this kind of clean rejection away from it. So I was actually anticipating higher prices for this week. I mean, I'm filming this on Thursday, and it's looking like it's going to be a down close weekly candle. I was anticipating more of an up close weekly candle, but it is what it is. Let me turn off my Discord notifications because that noise does my head in. And then on Euro, same again, inversely correlated. I have OTE, and you can see on Euro USD it actually came to 0.79 into this weekly rejection block and then rejected away from it. So back onto the DXY daily. So we had quite a few arrays that price tagged into. We've got this here is a order block, these two down close candles before the bullish displacement. That's a bullish order block, and as you can see it's tapped into there as well and rejected off of it. And also this is a daily breaker. So I was anticipating, like I said earlier, a bullish sort of close weekly candle. I wanted to see price kind of trade into these, sweep the previous day's high of these candles and eventually continue. On the Euro as well, again inversely correlated. Same kind of scenario. We've got this bearish daily order block right here, and then we've also got this breaker, which is not, it's traded through it, but it's not closed above it yet. So back onto the DXY 4 hour. Okay, so we've got another bullish order block here, which price traded into. Euro 4 hour, again similar scenario, traded into this 4 hour order block there. In fact, no, this is that's today. Yesterday it didn't actually quite reach into it. It did on the DXY, but it didn't quite make it on the Euro US dollar. So back onto the DXY, onto the 15 minute. Okay, so we was here. This was yesterday's price action on the 29th. I'm just going to draw a vertical line so nobody gets too confused. Yeah, that'll do. So as you can see here, we have drawn the Asian range, which would be from there, and down to Okay, so my drawn liquidity for the DXY was, we had these relatively equal highs here. This is also a previous day's high as well, so it's quite a significant liquidity pool. And we've also got this here, which is a volume imbalance, which I was looking to see get filled. We also had these little kind of equal highs there. I wasn't really anticipating that to get traded to, but it is still a draw on price for the algorithm to trade to. And London didn't really offer much. We kind of swept Asia range high, sweeping liquidity above this high as well, and then we traded lower. And as you can see here, sort of at the start of New York open kill zone for the DXY, we just swept the liquidity below this previous day's low. Where's my previous day's low? Right there. And we then displaced and had this market structure shift. But this is actually a market maker buy model, so it would be a smart money reversal, which is it's a very logical place to look for a smart money reversal. We've got the sweep of this previous day's low, we've got the sweep of the Asia range low, we've traded into this 4-hour order block, we've displaced away as well. The displacement is very important, as that shows intent for, well, in this case, price to see higher prices essentially. So all I had to do then was wait for some kind of retracement entry to get in line with my drawn liquidity, being these kind of relatively equal highs / previous day's high, and also this volume imbalance. Going back onto the euro, similar kind of scenario. Let me just draw the vertical line. That's gonna, yeah, okay, so that's all today's trading, forget about that. And we'll draw on the Asia range. So where is it? Midnight. Yeah, that'll do. 2-5. And again, Asia range low here. So as you can see, obviously the DXY and Euro US dollar is very inversely correlated. London open kill zone kind of swept the Asia range low and then displaced higher, and then we have this same smart money reversal market structure shift that filled some of this imbalance as well. Got a full close of this imbalance. So we've displaced to the downside, which confirmed our smart money reversal right here, and then it's just a case of finding some kind of retracement entry. Obviously this is all in line with DXY. I had my drawn liquidity being, we had these lows here, these are relatively equal. However, I always like to TP at the next opposing array, because sometimes price will trade into an opposing array and you'll get some kind of rejection off of it and it won't quite hit its draw on liquidity. Sometimes it does, sometimes it doesn't, but in my opinion it's always just safer just to TP at the next opposing array. I TP at where I definitely know where price is going to trade to. I don't think, it could come here, it could come there, it could come there. Having TP 1, 2, 3, 4, I think it's a bit of a bad idea, especially if you're holding out for TP4 and then it goes to TP3 and then reverses on you. You're going to feel pretty gutted about yourself that you didn't at least take any profits or close the trade out sooner. But anyway, so my entry was just here. We had this candle rejected off of this fair value gap here. I didn't quite reach this order block, and I had my entry right here, just above this candle's high. And get this right, yeah, and then TP at the next opposing array for 1.26R. I risked 1% of my account on this trade. With this one, I kind of wish I waited for price to get into premium of this range, because obviously we had this that candle there as a breaker block. We also had these two up close candles before the bearish displacement. That's a bearish order block. It didn't quite hit OTE. I did wish I waited for the breaker, if I'm honest with you. Could have said I might have FOMO'd it a bit, but I just seen the displacement and wanted to get in. I was sort of hoping we'll just sweep into this fair value gap here. But it was a short trade. You know, at the end of the day, there's lots of arrays it could have rejected off of. Obviously, I think it chose this break block and the order block, obviously. Price is displaced away, and we then get a second retracement. Price displaced into this down close candle here for bullish displacement. Again, that's another order block. Price is traded into there, and then we've then had another retracement. This would have been the silver bullet, which is usually the most reliable. In some cases, I will just take the silver bullet retracement as well. There's a saying goes, the silver bullet never misses. Obviously, you know, it does miss because nothing's 100% in Forex. There's no 100% win rate, but it is a lot more, you know, high probability. However, I did kind of take the, you know, quote unquote risk entry. There's clear draw on liquidity, and this displacement was also very clear as well, which shows intent of lower prices. So I took a re-entry here. It was at this order block, stop above the high. Again, same take profit as the first trade, being the next opposing array. I believe this actually, let me just remove that first OTA. I think this silver bullet entry, yeah, definitely came to OTA. So I could have OT'd that, got in at a better price. I mean, I got in just below equilibrium. Price has come back in. It's done a full close of this fair value gap here on this candle. And, you know, I sustained quite a bit of drawdown for both of these trades, I must admit. But I'm never too greedy with my stop loss. At the end of the day, there's 1.26, 1.24, you know, it's 2.5R. And 2.5R, you know, is all you need in a week. You only need 2, you know, maybe 3% a week to, you know, be successful in this business. I don't shoot for, you know, 5, 10R. I think it's ridiculous. And I believe the people that do it are just kind of hindsight traders. You know, you're probably going to sustain quite a lot of losses before you do get that 10R run. You know, no one's doing 10R a week. I see it all the time on Instagram, like, oh, I took a 50R trade. It's, you know, well, show us a broker statement then. And I guarantee you they wouldn't give you one, even if you asked for them. But anyway, that was the 2 trades I took. This is a market mix sell model, one of my favorite entry models. And I hope you enjoyed this video. I hope to do more of these videos. I know I've not been that active. I've had some stuff, you know, personal issues go on, so I couldn't really record any content, but I do aim to do a trade breakdown for every trade I take. So yeah, like and subscribe and leave a comment if you like.